may have seen quite recently that the Chancellor took it upon himself to write to the Office of Tax Simplification to ask them to have a look into capital gains tax. Now, of course, the context for this and the context that's been taken by the media generally has been that the public sector net borrowing requirement, as I've talked about before, is way over 300 billion. And so tax changes are quite likely to have to be made to recoup some of that or to get the money for some of that. Now, we know that servicing that debt going forward into the medium to long term with long dated gilts at low to zero to negative interest rates is not that hard. But getting some money in, given that we're not going to have austerity, is going to be almost inevitable. The OBR have stated, I believe, that we need to be getting in about 50 billion more tax each decade for the decades to come. So how are we going to do that? Well, increase tax possibly. Now, taxes aren't going to be increased if they impact on expenditure. We've seen VAT decreases, of course. But the first step may have been taken towards what tax increases might look like, tax increases that don't necessarily have an immediate impact on spending and economic activity. And that came with that Chancellor's letter of request to the Office of Tax Simplification. So I'll just read out what the areas are that he's asked them to have a look at. He's asked them to have a look at areas where the present rules can distort behaviour or do not meet their policy objectives and intent, and any proposals from the OTS on the regime of allowances, exemptions, reliefs, and the treatment of losses within capital gains tax, and the interaction of how gains are taxed compared to other types of income. Now, they've issued, the OTS, in response to that, a scoping document, a call for evidence, as they did for inheritance tax, and an online survey for individual taxpayers. And they're looking for responses by August, in two parts, August and October. So there's not much time to get your act together if you feel strongly about this kind of thing. So he's definitely given, the Chancellor that is, a nod to opportunities to simplify the taxation of chargeable gains as well. But that broader scope is one that has concerned a number of individuals, and it's been written about in the press. So what changes could we look at? Well, if one of the motivations for change is to get more tax in, as well as structurally reform the tax, then we could quite easily, and most people have said this, look to perhaps relinking capital gains tax to income tax. So instead of the separate regime that we have now, we'll still have the regime, but the rate is 20% or 10%. Of course, it's 28% if you sell residential property that isn't your main residence or in relation to carried interest. But basically, we've got 10% of basic rate taxpayers, 20% the rest, which is, less than half the top rate of income tax. So if you went back to the position that held for 20 years from 2008, and this was introduced by a Chancellor that was a Conservative Chancellor, Nigel Lawson, back in 2008, survived for 20 years. Okay, we did have taper relief and indexation relief, but 20 years of linking the capital gains tax rate to income tax rate. So if we go that way, then we could look at quite a significant increase in CGT, although interestingly, if we're saying it doubles the rate, yeah, it does, a higher rate taxpayers, it makes it even bigger for basic rate taxpayers. It doubles it, actually, doesn't it? Even bigger. What am I talking about? Where's my maths gone? 10% for basic rate taxpayers. If we moved it and linked it to income tax rate, it would be 20. So doubling broadly the rates for taxpayers and a little bit more for additional rate taxpayers. The majority of taxpayers who pay capital gains tax, and there are not that many, just over 3,000, I think, are basic rate taxpayers. But a doubling of the rate could help, of course. Now, CGT isn't a major tax generator. It generates almost double that of inheritance tax, just over £10 billion. But it's a contributor, and politically it may play well. It's not unlike the wealth tax kind of story in that the richer people who make capital gains, would suffer from that kind of tax change. Another change that might be thought about, by the way, that income tax rate change was suggested by the IPPR and the Resolution Foundation, and the Lib Dems and the Labour Party had a linking of CGT rates to income tax in their manifestos in the last election. They also suggested, I think, reducing the annual CGT exemption from its current level, which is 12.3 at the moment, down to £1,000. So none of this is new. It's a story that's been around for a while. So that will be an easy fix. The Office of Tax Simplification have already suggested in relation to inheritance tax that CGT capital gains should not be rebased on death if assets that pass on death that are rebased are also free of inheritance tax. So you shouldn't get both. It may be that the OTS goes even further and just says actually no assets should be rebased for CGT on death. Death shouldn't be the cause of removing past capital gains. What else could happen? Well, there could be, if we're looking at the increases in rates and the no rebasing on death, then we also have to consider possibility of further changes to business-related capital gains. But then again, will there be? We've already seen a reduction of that £10 million to £1 million as the kind of lifetime threshold for entrepreneurial relief. So maybe not too much more there. So lots of change potentially. If there were that change, and it's perhaps a little foolish to look too far ahead because we don't even know if there's going to be any change and then what that change would look like. But if the change were that we had a doubling of the CGT rate, it might make, without any further changes to other taxes being made, investment bonds look a little more attractive as a home for capital gains held within UK or international investment bonds. We'll have to wait and see. As I said, that call for evidence is out there. Response is required by respectively August and October. And we may just see something, some indication of what's been said, what's been suggested, what the government is thinking, or what the OTS is thinking when we get the autumn statement. We'll be covering this in Techlink, of course, through the bulletins.